Hey everybody, thanks for coming today. It's Jeff Gibby and I'm excited to kind of start the second Online Trader Summit. Welcome, thanks for coming. Good morning, I hope you can hear me. We've got a few people here helping. If you have questions, please ask. Let's go ahead and get underway. There's a lot of stuff to go, and I definitely need to start here. Today's demonstrations are designed to instruct you on using MetaStock and the accompanying software plugins. They're not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Moving straight along, hope you guys enjoyed that. Good morning. Really appreciate your coming to the first MetaStock Online Trading Summit. If you we're going to say this a couple times today. If you want a free trial of MetaStock, it's been rated #1 in its price category for 24 years in a row. And you can do that at metastock.com/tradersummit with an extra T in the end, Trader Summit T. I do want to thank our sponsor today, Technical Analysis of Stocks and Commodities. Just for registering, you're going to get a free copy of the magazine. I want you to know if you subscribe to any of the services that are going to be offered to you today in this educational summit, you're going to get a subscription to Stocks and Commodities as part of that. So if you buy anything today, you're going to get a 5-month subscription to Stocks and Commodities, and if you spend $300 or more, you're going to get 2 years of Stocks and Commodities. And as we get started, I do want to thank First Stocks and Commodities for all their support and kind of making this event possible. It's an awesome magazine, something that I really even still look forward to getting in my mailbox every day. And let's go ahead and get underway. Our first guest speaker today is Daryl Martin. Daryl I consider a friend. I've met him quite a few times at the different trade shows. I'm really excited because we're finally getting, and it's something that we've been working on a lot for a while, but we're finally getting kind of his methodologies and the techniques and the things that he uses into MetaStock. And the things that I want to say about Daryl is he's a really nice guy, has some very beautiful daughters that he always brings into the event, and really like Daryl. I want to bring him in. Daryl, let's have you come on in.
Hey there, how's it going?
I'm doing great. How are you today?
I'm doing fantastic, man. So it's good to finally be able to get on one of these MetaStock webinars and join up with you all. We've been talking for, I think we've known each other for
forever.
8 years or 9 years now, yeah.
Yeah, forever. So I just turned you into the presenter, hopefully.
All right, let's see here. There we go.
Okay, good. I got the right one. Okay. And I can see your screen. So I'm going to go ahead and mute. I know we have, as being the first one, we have all the disclaimers to get out of the way. So I'm going to get out of your way and let you just kind of take over.
Okay, and then I can see the questions for panelists. I think you have to make me an organizer, by the way, to see them for everybody else. And
oh, I can do that. Yeah, let me do that for you right now.
Just don't want to have somebody feel like I'm ignoring their questions.
Yeah, no problem.
Hear and see me okay. I just want to make sure that I got good audio and video across the board. Check. All right, I appreciate that, Anthony. And everybody hopping on up this morning, getting everything going. Okay, so let me get started. Okay, so right here, I think somebody needs to mute. Jeff, can you go and mute everybody else besides me? That'll make it a lot easier. Just to make sure somebody didn't accidentally unmute themselves. Okay, so we got, my name is Darrel Martin. I'm from Apex Investing Institute, and been very excited because we're about to release this MetaStock product. We've been working on a long time getting some of the trading plan things that I do released into MetaStock, and I do trading competitions and things like that. I think in second place right now, up like 75%. So I love to trade. I'm a real trader, so I'm not just an educator or anything like that. I don't know how to program worth a lick, but I do. We have about 8,000 active members at Apex Investing Active Traders, and so we have a team of programmers that work for all of our members to basically find out what it is that we want and need to make things easier and better. And I'll tell you the specific link that I'm going to give you that will give you free access to what I'm going to show you today, okay? And you'll be getting a 30-day free access trial. So let's just get the sales pitch out of the way. I want you to know that, okay? So if you're a MetaStock user and you have MetaStock data, we're going to give you, and you're a brand new Apex member, we're going to give you free access. I'll give you that link here at the end of the webinar. And it's how to actually implement our plans that give exact and precise entry stops and take profits. And so with that being said, I want to go ahead and get going. We got our disclosures as well. Trading options, futures, whatever involves risk. Know what you're doing before you do it. Proprietary information, etc. I'm not going to spend a lot of time. Jeffrey already covered this. Trading involves risk. We're all big boys and girls. This is educational. You have to make your own decisions when it comes right down to live cash, okay? So the topic today, I'm talking about what's called magnet pricing. This is something I've learned from one of my mentors. It's one of the most powerful things and to get down in trading. And it's how to know on a daily time frame. So some of you you trade longer time frames. Now our plans are going to focus a little bit more on intraday, but this is useful on, and I mean really useful, on daily and on intraday time frames. As far as how far or what price the market's going to go to next. Like if it keeps going up, where is it going to go to? If it goes down, where is it going to go to? And this can help you on going, hey, where would stops be a good idea? Where would take profits be a good idea? Where would entries be a good idea? So you have whatever system you use, whether you use ours or you use someone else's or you've made your own or whatever little red and green thing you're using or whatever it is, to have an idea of a realistic profit target and where you should expect resistance to happen. I'm not talking just basic support resistance, but actually something a little bit beyond that that's very, very powerful. And again, every trader can use what I'm going to teach you, okay? It can be used on any instrument. I will give you a caveat on Forex. You're going to need to actually line up two charts, okay? You're going to need to look at, like say, euro dollar, and then you're going to need to look at 6E. So if you're trading spot Forex, you'd want to look at 6E's volume, because that's what we're going to be talking about is volume. And then if you're looking at UJ, you'd look at, or sorry, if you're looking at US yen, you'd look at 6J. So you would want to use the futures Forex in order to look at and use the volume for a spot Forex pair. You can even combine two of them if you're using a cross currency. Like if you're trading euro yen, you could look at 6J and 6J and 6E for euro yen. So for long-term traders, I've used daily bars. You could try weekly bars. I haven't really played that much with weekly bars, but on daily bars, this works excellent. And for day traders, 10-minute bars is what I found have actually been most effective. Now, I'm not saying that you can look at 3-minute bars, 5-minute bars, 30-minute bars, hour bars for your trading, okay? Whatever the 240-minute bars, whatever it is you like to use. But to establish these levels, and with the institutional traders that I've worked with, what I found is that 10-minute bars are actually the best for doing this method, okay? Again, can use this with any system you have right now, any existing systems, any strategies. I want to make sure you walk away with something of value, okay? So again, what is magnet pricing? So it can be used on any instrument. And again, I want to get across that you can do daily and intraday time frames. So 10-minute bars, daily bars, everybody ought to have that down, any system, any strategy. And you don't need to change your system to learn a new one, okay? A simple chart with volume will do it. All right, so what is magnet pricing? It's going to be using what's called extremely high volume bars. They're higher than normal. I don't mean like, 5 different people look at it, everybody's going to have a different idea of what higher than normal is. They're not subjective. They're very easy to spot, okay? They're not the congestion area volume, but they're high spikes in volume. And that is a price specifically that the market will be drawn directly to again and again. Sometimes you'll see it literally just bounce off of that price again and again. It's 10 times more powerful than support resistance. It's a price that a lot of people agreed upon at one time, okay? And so that is what we're going to be looking at. Here's an example of gold, and we're looking on a daily time frame. I'm sure we have some gold traders out there. Maybe you trade GLD, maybe you trade GC, maybe you trade CFDs, whatever it is. But here is an example of gold. And what I've done is I've plotted high volume. You can see these spikes. They're not subjective. I mean, they're heads above the rest. Okay, there's a whole lot of spikes at these levels, but there's very few at these levels that I've circled on here. And so all you have to do, and basically, I mean, right here we got a marker of basically 20,000 contracts on gold on a daily basis. So on days that are seeing 20,000 volume, and that, I mean, that's just the number I'm giving you. Go back and look. You'll see if that's the right number. I mean, should be obvious. And so if we go right in here and look at that, then basically what I do is I draw a line on the bar at the close of the bar there. Some people do it at the high or the low, but right around that price level. So you can give or take, obviously, a few ticks. But as you can see, like back here, we had this high volume bar right here. And look how the market came back down to it, came back down to it. Market ran up, came right back down to that high volume bar. Most people wouldn't even try to draw a support line where there's only a couple bars hitting a price. Okay? And so it comes down, it hits this level, bounces off of it, comes into this congestion zone where we actually have several volume spikes, and just plays in that area before dropping right back down. And this time when it breaks it, it hits it hard. And what does it do? It goes down to a previous day's high volume bar. Okay, so just first that simple concept. Does everybody get really high volume spikes? You can go through, put a line to sort of define what that defining, line is. Circle those up, go through, and then just draw lines right there at the, the lows on a down close, the highs on an up close. I've seen some people do ranges where they'll actually highlight the entire range, the high to the low, and some people just do closes to make it simpler. But bottom line is, you want to see it come right down to that price, bounce off of it. If it does go through it, it should go right to the next magnet price. I mean, time and time and time again. Okay? It's really simple. It's almost so simple you're like, really? Really does that work? You plot this and you will be amazed. Okay? It is one of the, I think it's actually the simplest, coolest thing that exists for technical analysis and trading, period. Every trader I've taught it to, and I mean every trader I've taught it to has come back like, I can't believe how well this actually works. Okay? It's really powerful, it's really simple, and anybody who does this today will walk away a better trader. Okay? And again, all this is a daily bar with volume on it. Okay? And now you need to have a system, obviously to define when you're going to get in, how you're going to go short, how you're going to go long, where you're going to put your stops. Targets are pretty simple. Right? Where's it going to go to next? If I got to buy, well, I think it's going to at least go to here or go to there, And, but I mean, again, you can break this down. Either use 10-minute bars if you're an intraday trader. No matter what time frame you trade on intraday, use 10-minute bars to find the levels. Okay? And so you can find them on 10-minute bars, and you can plot them on your 30-minute chart, your hour chart, your whatever, cross them over, things like that. So what lines am I drawing? All right, so again, to make this really simple, all I'm doing is I'm drawing lines where there's extremely high volume. That's it. I mean, it literally is not more complicated than that. If I bring up a MetaStock chart over here, right there, we got an extremely high volume bar. Okay? So let me zoom in on it to give you an example. Okay? So right over here, we have an extremely high volume bar. And let me get my little drawing tools up. There we go. So right there. And we talked a little bit earlier about, a high volume bar on gold would be right around 20,000. So let's bring this up here a little bit, make it a little easier to define what, 20,000 or so contracts is. And I mean, you can look at it, you can back up and go, is 20,000 right? It should be a higher number, et cetera. But what I want you to do is I want to see, okay, we got a really high volume spike. And then I'm simply taking a horizontal line, okay, and plotting it right there. Now I have a magnet price. Market pops up. Where's it going to come down to? Right to that point. It breaks down. Where's it come back up to? Right to that point. It comes down again. It comes right back to that point. It goes up. I get a sell. Where does it go down to? Right to that point. Okay, it comes down. I start getting a buyback. I have an oversold condition, whatever, an oscillator, whatever it is that you use. Boom, pops right back up, falls down. I get another buy. Where does it go? Right back up to it. Okay, it comes back down. Where does it go back up? Right back up to it. So I hope you see the concept here, okay? So I'm just simply drawing a horizontal line. That's it. And I'm drawing it right where the magnet price bar took place. And we're seeing the market get drawn right to that spike again and again and again. That's a line all the way back from April of 2013. And look at how powerful that's been if you're on a daily chart. Okay? Now, if I zoomed in a lot further, I'm sure we can find a whole lot more, as I already showed you on the last slide. But now, here's one thing you need to think about. Okay? If we're making brand new lows, are you going to have to go back further in time to get the information? So, like gold is, it's breaking new lows right now, right? So you probably have to, go back in time till you get back down to where gold is at to get some volume spikes. Now that was an extreme volume spike. Obviously, the more extreme, the more powerful it is. But you have to go back further in time. You can just, arrange your volume, go in here, find those, and you can plot them on there. And at a certain point, it's going to get a little messy. You're probably going to want to go in and start deleting some lines that, when there's just like too many of them in one spot. Okay, it should be sort of obvious. When your chart's getting messy, start going back and getting rid of older and older lines. So it'd be the same with the high. You had an up high move, you could plot it right at the high, exactly. Okay? And let's see. I personally like to draw it on the low, on a down close, and the high on an up close. If you want to get a range, now what I do when I draw that is I have an idea of a few ticks, especially if you're going down to an intraday chart, right? And so, if you want to get a range, the best way would be like close to low on a down bar, close to high on an up bar to give you a range, okay? So for a high, let's see, where we got to get an up bar. It's a little hard to give you a spike high when we haven't had one, but let's see. Okay, that one's pretty, that's a volume bar. That closes up, so it's real simple. Just I'm going to go over here, right here, and on this volume spike up. And I'm not drawing every line on here. I don't want to clutter the chart for you. I'm just trying to make sure you get the basic concept down. And you can see it breaks up. You get a short, maybe it comes back down through that magnet, and it does it with some volume, which is nice. Comes on back down. Where does it go? Pop, hits it right there. Hits it with some volume. Comes back around, boom, right back up. Comes back down, where does it go? Boom. A lot of people would not draw. Remember, I drew that simply right there just based on that up close high volume bar. Okay, now I can go through, I can draw all of them. We can spend a lot of time doing this. But this is literally the entire concept. Okay, I mean, there's not a lot more to it. It's just sit down and draw it. And just try it on one instrument. You'll be amazed after doing it. I have nothing to gain off this. I'm just trying to teach you a very, very simple, strategy that most people wouldn't even see a support and resistance like right at that level. And they may go in, but I mean, maybe you see resistance here because you see that here, here, and here. But did you see it there? You saw a down move, but did you see a resistance level? No. So as soon as this happened, boom, you're like, okay, there's a magnet. And then as you start trading from the right side of the chart, which is the side that really matters, right? Oh, wow, yeah, that is a good support resistance level. The market keeps going right to that price. Okay? So this is really, yeah, you should be able to use this already. So, like, this is one of those things, like right now, open volume, just start plotting backwards, okay? Start with your most recent magnets. Back out. I do recommend backing out on the chart enough to where you can tell what a spike is. And then once you can tell what a spike is, then, start here. Go backwards. And start adding on more and more. Now, what I like to do is I like to have 3 levels above me and 3 levels below me. So I'm sort of ready for what, the next level that's coming. And so if you're going to go, if we're making new lows, you're going to have you have to go further back in time. You have to really zoom out or, get back here to where the price is at. So you can start getting some magnets. But guess what? We do have some magnets. Like right there is a magnet. So if I went over here and I clicked on this price level, which, I mean, check that out. I mean, just looking historically, you can see the same things happening again and again. But right there, and then let's take that, and this is back from when? We're all the way back here on, what are we on here? 2010. July 28th of 2010. We're way back there. And I scroll all the way forward, Look at that. That level is from July. Okay? Now we also have some more recent magnets happening right here. But I mean, that level that we just picked out, we literally hadn't seen it since July. So we got pretty close on this one right here already. Now if I did that range like I was talking about, we probably would have encapsulated. If we go all the way back here and we get a range on here, we got this one, and we can go grab a couple others if we want to. There's a high. Look at that. That's a level from current that also was a magnet back in June of 2010. These levels, I mean, are they comparable? Yes and no. The issue is fib levels, which I do use for advanced analysis, for confluence analysis, in the sense of, yeah, expecting where the price is going to go to next. So, John, you're actually right on the track. But the difference here is these are not based on a statistical model of, one number being larger than the second number and multiplying, et cetera, like a fib level is. And fib levels work because so many traders use them. I mean, that's the bottom line. And so I think it's very smart to look at fib and GAN and golden and all that, ratios. But I look at them to see what the other traders are doing. One of the terms that I use, that I teach, is called diagnostic trading, and that's where I look at how fundamental, technical, seasonal, and statistical traders look at the market to see what they're going to do, to know where the orders are going to be next, to know where the price is going to hit. This is pure volume. This is pure price agreement. Now, if you add on support, and then you add on resistance, and then you add on highs and lows of days, weeks, months, years, you add on, fib levels, golden GAN ratio, do that kind of homework. If you put all that together, then you actually get a really clear plan, because stuff will just you'll have confluence going like crazy, and you're like, wow, there are so many orders based on so many different trading styles. People are going to place orders here. And here's the bottom line: the market goes to where the orders are. A guy driving a grocery truck, an ice cream truck doesn't drive to, and I don't mean this to be rude in any kind of way, but doesn't go to like the retirement community where people have, diabetes, right? He goes to where all the kiddies are playing on the playground to sell them ice cream. And then he goes to the next neighborhood that has kids that come outside. He doesn't go to the homes that nobody ever comes outside. He goes to where people want his product. That's what the market does. The market exists for one reason. It doesn't exist to fulfill our indicators or make us profit. I mean, obviously, we want it to make us, we want to make profit off of it. But it exists to fill orders. That's what an exchange is, okay? It's there to fulfill orders between buyers and sellers. Why does a grocery store exist? It doesn't exist really to sell you milk. It exists to fill orders between buyers and sellers, and the product that decides to stick on the, shelves is milk and cereal and everything else. If you understand that about the market, that's why the market exists, then you start to actually get trading, because you're like, all the analysis you're trying to do is trying to do one thing: tell you where are the orders, because that's where the market's going to next. Okay? And so I use 10-minute bars on intraday. I use daily so 10-minute bars, no matter what time frame you like to analyze, I'm still going to pull my levels from 10-minute bars for intraday trading, and I'm going to pull my levels on, if I'm trading longer term. Now, personally, I don't trade a lot of longer term. I love to go in, make my cash, walk out the door, go play with the family, and not think about a position. Some of you love longer-term positions. You hate sitting there for 3 or 4 hours trading. So, whatever style it is you like to trade, you can use this. Just 10 minutes on intraday dailies for longer time frame. And what is confluence? Daryl asked, confluence is when multiple, you could say, indicators or analysis line up at the same price level. So when a Fibonacci level lines up with a support resistance, lines up with a golden or GAN ratio, lines up with, volume. So that's when when you put multiple things on your chart and it all comes together, the market is going to be even more attracted to getting to that price, because there'll be more orders there. Why? Because more traders have placed orders there. That's where they're going to place orders, because that's how they analyze the market. So the more traders are analyzing the market at the same price level, the more traders will put orders to enter, exit, stop, whatever, at that level. So it does not apply to very low volume bars. No, this is a high volume bar thing. It's not try the opposite. Okay? You can do this on S&P. You can do it on oil. You can do it on whatever you want to. Obviously, unfortunately, I only have an hour today, so I can't dive into everything in massive detail. I want to show you some application on top of how to do this. But I hope, and I have a couple other webinars on this on our website. I'll show you how to get access for free in a minute. On this, under our style section, and where I go into volume and magnet pricing and give examples of actual trades and live trades and things like that doing it. Okay. Let's see. Ashok just said just tried it on crude on 10 minutes. It already seems to work. It's going to explore further. So, and then Sam brings up one more question. Then I'm going to keep moving because I want to get on to how I apply it on an intraday basis. How do you use this on something that's decentralized like Forex? On Forex, you're going to have to use volume on the futures Forex. So if you're looking at euro dollar, look at 6C. If you're looking at dollar yen, look at 6J. Okay? And then just line up the volume timestamp with the price bar on spot Forex. Or if you're using euro J, look at 6E, 6J. Okay? Combine those two together to look at, high volume spikes. There are ways to do it. It's a little bit more advanced, a little bit more than I can get into depth on this webinar. And but you can do it. But that's what you would need to do. So it's available on FX trading. So many people say that, but it actually is available. It's available for futures Forex, which is exchange-based, and where a lot of that big money goes. So that's where you want to be looking for your futures Forex volume, even if you're a spot Forex trader. I think it's one of the biggest mistakes Forex traders make is they don't know to look at futures Forex volume. You keep asking what's my average volume time setting. I'm using 10 minutes on intradays, 10-minute bars, 10-minute volume. I'm looking at daily bars, daily volume. That's it. I don't know what else your question is. I'm sorry, but that's what I use. And it's not average. That's what I use every single time. You could use this on the QQQs. Yes. You can use it on VIX futures because you have volume. If you're going to SPX, then you'd probably be looking at either ES or spiders for volume. Okay. So basically, just find a contract that actually has volume. Since SPX is not tradable, it's an index. You can trade options on it. Then find an indice or a future contract or an ETF or a future contract that crosses over, and you can do it on that, no problem. Okay. And then again, just grab the timestamp and then plot it on the SPX chart. Okay. I use basically high. If it's an up close bar, I'm going to use the high to the close. If it's a down close bar, I'm going to use the low to a close. So, and Ashok has literally just started this here in the last 20 minutes. He's already saying it's a worthwhile exercise and it's definitely doable. So, if y'all will register, and I'll show you at the end how to register, I'll do a whole other webinar. We can even dive into more detail on the magnets. Okay? So I'd be happy to go into more detail. I don't want to spend, I would love to spend the time, but I know Rob's going to come up here in about 30 minutes and be like, hey, get off. And Rob's an awesome trader as well. We both respect each other a lot. We've had trading contests. I think we were $50 or $100 apart after a 45-minute trading contest. It was great. And I just don't want to run into his time. So, but anyways, there's a lot of application. I'll be glad to answer all your questions if I have time, but let me go ahead and get forward so we can wrap up, and I'll be happy to help you out and help you keep learning. So all the education on Apex is free. Okay? All right, so we got that example out of the way. So how to use it? You got profit targets, right? Obviously, you can use magnet prices for profit targets. You can use them for trailing and tightening stops. Like that chart we looked at earlier. If it's going up, or going down, down, like if it's going down here, boom, it hits level 1, hits level 2, you can tighten, tighten, tighten. Here, think about this. You said, hey, it goes down here, and it breaks this. Maybe you tighten your stop up. It comes down, breaks another level, you tighten your stop. Once it breaks another level, you tighten your stop. Breaks another level, you tighten your stop. Breaks another level, you tighten your stop. So there's a lot of ways you can tighten your stops up, like on the daily bars that broke the level. Just whatever you're comfortable with. I mean, there's a lot more advanced ways to do, trailing stops, but that's a simple method to give you an idea of when to at least tighten that puppy up, okay? And you can look for reversal trades, when it does hit one of those levels. You're going to be expecting it may pop right off of it. And you can have a really tight stop on a reversal. Either it's going to break down or it's not. So that'd be an idea where when maybe your other methods of trading, whatever they are, whether it be a method that Apex teaches or some other method, then for an entry definition, then that can help be a strong confirmation for you to give you more confidence in that trade and possibly even where to place your stop. And maybe when to not take, trades in an additional direction. You may go in, you're like, I don't think I want to short right into the magnet. I don't want to buy just right here because it went right here. But once I get a breakout of confirmation, there's a lot of congestion here. If I get a breakout of this, and okay, so that bar broke with some volume, and so now you're ready. But you didn't do it like right on the first one. You waited for that to happen. So when not to take trades, which the best way that I know of to limit risk and let your profits run, right? That's the trader's motto there, the best way to limit risk is to not take bad trades in the first place. And so doing things like this where you can see there's going to be very obvious, resistance walls in your way is the best place to know when not to add on a trade. I'm more likely to get in right here when a trade is starting to move up and I see it moving up and then put a really tight stop and then target that level. Like I got a big wide range here. I love that, okay? If I'm a scalper, I'm going to love this area where there's a lot of congestion on it. So I'd go far enough to have at least 3 above and 3 below me is what I would do if I'm going on intraday. And then let's see here. So how to use it. We talked about profit targets. You can use multiple strategies any way you want to. You can take the time to plot it every day, which, I mean, it does take some time. All right, the one downside to this is it does take some time. We're working on an automation process. It's pretty intensive. It's going to take quite a while. But you can take that time. It can be useful, but it does require time every day. Or you can take advantage of something that we do have, which is day trade plans that we're excited about. We're actually going to be releasing these out this week into MetaStock. Okay, we're doing final touch-ups this weekend. We're going to release it out this week. We're going to let all you try it for free. And where we do the work for you every day. And we go deeper than just the magnets. So we look at confluence. There's 2 floor traders, previous floor traders, and then fund analysis managers. I did a lot of fund analysis for ARB funds, arbitrage funds. And then we have a couple, just retail traders. All 5 of us are involved in this. We spend over 8 hours a day on 8 instruments total that we do it on. And right now, it's literally, we spend an hour a day on every instrument doing the analysis between all of us combined. And so we're going in, we're doing professional market diagnostic analysis. We're looking at technicals, fundamentals. We're looking at seasonality, government news announcements that are coming out, things like that, and how that long-term that's impacting that currency or the market in general. We're looking at highs and lows of days, of weeks, of the month, of the year. We're looking at deviation levels, which I actually use implied volatility out of options to know how far a market will move on each day, versus using standard deviation, which was yesterday's movement. I'm like, how far does the market say the market will move today? Where do people put their money where their mouth is? That's built into option pricing. Pull that out, and then we look at support resistance. We're going into golden and Gann ratios. We're checking out Fibonacci levels, trend lines, moving averages, 200-day moving averages, 100-day moving averages, and putting it all together. A few different chart patterns that are pretty dominant that we look at, and merging areas of confluence, so where that stuff comes together. Just to give you, that's just a little bit of what we're doing every day. We wrote all into a very simple day trade plan. You can apply it. I'll tell you the specific markets here in 1 second. But if you're a futures trader, a forex trader, a CFD trader, a binary trader, a spread trader, option traders, depending, as long as the bid offer are tight enough and it's liquid. So just regular options. It can be done on as well. But again, you need that tight enough bid offer that it'll make it worth the entries and the exits. Because right now we've designed it for day trading. But again, you can take the magnet option model that I taught you today. You can use it on anything. This is just taking all the analysis and putting it all together. And these relate directly to the underlying market. So it doesn't matter if it's an option, a binary spread, a CFD, whatever. You can apply it. Look at some examples. These are just from the trades from the last couple of days. They're not cherry-picked from months ago. Once we release this, you're going to get access. I'm going to give you access to actually check out all the markets so you can see how they've done. They're auto-plotted in. But this is Aussie dollar. And basically it went short here. It went down to its target. Okay, it went long here. It went up to its target. We got oil. So it comes on down and pops up. Basically, we have what's called a reset rule. It had to reset, and it pops up. We make a profit. Pops up. We make a profit. Entry to target. We got the S&P moving down to a target. I'm going to go down through this. I'm going to slow it down for you in a second. We got an entry 6A. We're going to target 6A. We got gold entry 1A. It's going down to target 1A. Right down here 1132. That's $600 on that single trade. We got Russell. So we got an entry right here. We got in here and oscillated around. We also could have, and probably taken like maybe a 1-point loss on that trade, just got out of the way. I'll show you how those rules work in a second. I'm in more detail. And then we got another, what's called a re-entry. We pop in, boom, it pops on up. It goes from 1169 to 1175 actually is the target up here, sort of squishing it down, but 1175. So another $600 on a trade. Just the last couple days. over, just on the trades I just showed you, is over $3,000 in profit. That's not all the trades on all the markets. That's just some of the trades, and that's just some of the markets, okay? The markets that we cover specifically are oil, Russell, gold, S&P, dollar yen, pound dollar, euro dollar, and Aussie dollar. These are spot FX, and obviously these are futures, okay? If you wanted to apply this to futures FX, you just need to look at whatever price we post, look at the difference between spot and futures that day. Usually it'll stay pretty much the same. Like somebody was looking at the Aussie dollar the other day, and it was like a 5-tick difference. So you just need to subtract 5 ticks if you're trading over on the futures. If you're applying this from like ES to the SPX or whatever, then you just need to look at the difference for the price. But most people are trading these directly on futures and spot forex or futures forex. But these are the markets we cover. It's not automated. This isn't an indicator where we just put it on the screen. We actually do all the analysis. We actually type it into our server. So I have a couple of the retail traders that help out in this process. They actually help put all the data in. There's an import process once we're all done. And then it spits it out to the chart from our server. So it's not doing calculations on your chart. There's no historical processing going on here. It's feeding live into it. Okay? And this is what it looks like. So I'll bring up the program here in a second as well for you. But so you have like an entry, So first thing, just to explain how it works. Green entry, what do you think that means? I mean, I know this is really obvious and really simple, but what do you think a green entry means? It means to buy. There we go. Thank you, Anthony. So I want to show you how simple it is. All right, so don't be hesitant to answer even the simplest questions. I'm not trying to trap you, okay? Exactly. Go long. Buy to go long. Buy to enter to go long. Exactly. So entry 3A, okay? So what do you think our red line means? Just for an example. It means to, doesn't mean to stop, it means to sell or go short because it's an entry, okay? You could use a stop entry, but yeah, it'd be to short, okay? So red line for entry, means to short or sell, okay? Sell to enter or go short, same thing. So green entry means buy, red entry means, or green entry means go long to buy, red entry means go short, sell to, enter there. Obviously, did not take you any time to learn that. Pretty simple, price printed right on the chart, okay? So we also have some numbers in here. What do these numbers mean? Like entry 3A, target 3A. Now there'll also be a stop loss 3A. So what that does, that links the trade, okay? So it says 3A, 3A. So that target belongs to that entry, okay? And then you got the price at 85.90 and at 86.10. So you can easily match the trade between each level. So you'll have an entry level on trade 1A, a profit target on trade 1A, a stop loss level on trade 1A. Does that make sense? Pretty simple. So what we do to determine the lines are green or red, well, if it's a buy, it's green, okay? So we're basically just making it green for the entry, green for the target on the long entry, and then it'll be a solid red line for the short entry and a little dotted line for the target or targets on a sold contract, okay? So pretty simple, green buy to enter, okay? And we'll go with a buy target and red to enter. Basis of marking is what I just went over. So we mark it based on magnet pricing, Fibonacci level, support resistance, previous bars. We do all that. You're getting professional floor traders, fund traders, retail traders all coming together, and we're actually putting together these plans each and every day. So the basis is actually all the market research. There's not if it hit these 12 things, then we went in and did this. It's not an average of these numbers or whatever. I mean, it literally is good old manual analysis, okay? I just want you first to understand how it goes together. It really is simple. Just takes a minute for somebody to show you. how to put, the green lines together, the red lines together, and that's about it. Okay? Yes, you can use magnet pricing levels on equities. I don't design day trading plans for equities. The main reason is because I can get so much more leverage on futures and forex and options. Even with portfolio margining, if you have that, you have to have 125 grand in your account and pass some little options exam or whatever, and you only have to put like 15% or max risk. Even with that, you get better leverage with futures and forex. So now, not everybody likes to trade those, and that's fine. I'm not, trying to push them one way or the other. It's just that's why I don't make plans on them, because I don't trade them every day. But yes, it works great on it. The person who taught me how to do this actually uses it on stocks. It's one of my mentors. I have about 5 mentors that I've worked with over the years. Most of them are pretty old at this point, but they don't do mentoring anymore. But yes, it works well on equities. Okay. So yeah, so what I am saying is my enter on trade 3A, my target would be 3A. That is correct. Okay. So, but yeah, you got it done. That's really all there is to it. There's not a whole lot, it's not a lot of magic there. It's pretty simple. So, okay, so let me keep going here. So the numbers match up. It doesn't take a lot of time to learn and figure out how to put that together. So there also will be a stop loss, etc. Yeah, there'll be stop losses. I'm just trying to put it together. Okay, so you'll understand the target is where it says target 1, right? So here, I just want to show you the difference, the rollover of target 4A, target 3A. Obviously, we're shooting for the 3A target because that linked to the trade. So yes, Edward. Let's see. The dotted yellow line on the chart would actually be one of the stops. So if you're looking at a dotted yellow line on the chart, would be a stop. Okay. Okay, so everybody got down what the target is. The target level is tied to the trade number of the trade you're entering on. The listed target profit level is your primary goal. That's what we call a conservative target. I tell most people to go for those conservative targets. Yes, we have target 2, 3, 4, up to 5 targets. It depends upon the trade. Sometimes we only have 1, sometimes we have 5 targets. But I tell people first just go for that first target, then you can work on your skills on doing it. Right here, so what is a stop? So right here, we go over, we got a stop on a trade. So now what happened? Who can guess? This is Friday. Who can guess what this is? What do you think happened right here? This was NFP. We put a warning in the plan that says, hey, watch out for news. We actually post a whole news commentary section inside of our site that says what news you need to watch out for, what news you need to be aware of, and back off of trades, and then get back going after the trade's over. So like, hey, I'm all about this buy, but I would not be about having any kind of order sitting right into NFP on a directional trade. I'll go multi-directional with options. And we actually go in here and we actually say how far we expect each market to move on certain announcements and things like that. Like right here we had, what was that, the 7th? So yeah, here's the unemployment rate. We actually broke down expected movements like on FX markets, and we basically said, hedge and get out of the way if you're trading. Now, one of our rules is if you get half of the way to the target, we move a stop to break even. So if we get 50% to the target, what I usually use the fib level. I'll just grab the fib tool and click, and it'll show me the 50% marker. As soon as I get 50%, I move to break even, I get out of the trade. There's no reason to be in it anymore. It's not moving in my favor. So on this one, you get in, boom, you're out of break even. Pulls on back down, you get in, it gets up. It actually does get to about 50%, but NFP's coming out, hedge the trade, I'll put your stop in, probably just get out of the trade because it's going to go insane. Now, you may have actually made money, okay? But I mean, it was crazy volatile. Okay, 20 minutes have passed by. These are 10-minute bars. Now let's go ahead and set some new entries back in, set an entry to buy. You'll have entries to sell up here. You can get in the trade. The exit right here is a stop, so stop 3A, okay? So it's a little bit, it says 85.75 over here, to sort of the way it plots to make it all fit on the screen is actually down at 85.70. As you can see, it says 85.70. It's actually a little bit lower, but 85 at 70, okay? So entry 3A, target 3A, stop 3A. So stop loss is the level that you're going to exit the trade if it's going against you. That's if you haven't moved your stop to break even. And we actually have step-by-step rules that printed out, PDF format, super simple, okay, that you can actually review this weekend, all right? And so if you entered a trade, where should you go to get out? You know, is it going the other direction against you? And we will list the stop loss level with every single trade. It will have a stop defined up front, okay? NFP is non-farm payroll, employment change, unemployment rate. It's the biggest news announcement of the year, or of the, well, not of the year, but of the month. So then you go on with FOMC. FOMC and NFP are the two biggest announcements. Any kind of interest rate, employment number, like those are the numbers you have to really watch out for, especially in, you know, today's age. But for those of you who aren't familiar with news, even if you don't trade news, you better be aware of it because that's where you get slapped around. And so that's why I make that news calendar and I list all the news announcements, the major ones coming out that week and what to be aware of. Okay? If you're buying, you're going to be buying at the ask. If you're selling, you'll be selling at the bid. So, and then margins. Margins depend upon your brokerage. So whatever your brokerage gives you is the margin you use. So I can't tell you what your margins is without knowing who your broker is and what margins they offer. Okay, so we also have trading plan notes. And this is where we actually go in, and if you click on it, it'll actually give you specific notes. This is an application that ties in directly to MetaStock, okay? So you have to have MetaStock installed for this new application we're releasing. You have to have MetaStock installed. It'll use the data engine that you have with your MetaStock subscription. So, you know, like on euro dollar, it's chosen that right there. We can go over to pound dollar, dollar yen, euro dollar, Aussie dollar, you know, gold, oil, whatever. And then you can go through and you can look at multiple days, including historical data. Okay, so you can go back. And we actually give you commentary on each trade. Why are we doing it? What are we looking at? So sometimes you have a lot of information. Sometimes you have like a line of information. Okay? Break below 1145 is very negative. It keeps the market under pressure. Target 1140.39, 1135, 1134. Okay? So, you know, we can go in, we can pull up S&P. We can pull up, you know, Russell. So there's a lot of different markets we can go in and we can pull up, and we can even open a chart on, you know, a variety of instruments to look at when we're trading it. Now, some days it'll be loaded with trades. Some days there won't be any trades. That's one of the reasons why we do multiple markets, because the level just may not get hit. I mean, that makes sense, right? Sometimes the level's just not going to get hit. So, you know, it's depending upon what happens that day in the market. Okay, it'll stay logged in. So once you're in, it'll stay logged in. So, because I recommend people reboot their computer each day. But you don't have to. Basically, you log into MetaStock, and then it'll connect and use that same data feed you're using for your charts. So it is integrated directly into MetaStock. All right, let's see here. That doesn't necessarily mean your stop profit is less than your stop loss. We basically use the stops. One of the things, we don't just pick stops and profits based on our desired risk reward. We actually pick them based upon what's likely to work. So I'm looking at, you know, what is the best entry level? What is the best stop based on this? What is the best take profit based on this? And the stop that we put is what we determine as what we call a worst case stop loss, okay? Meaning we actually have 3 rules, okay? One of those rules I already told you. If it moves 50% between entry and stop, then we're entry and target. Between the entry price and the target price, we're going to move our stop to break even. Another rule we have is if by 3 bars after the entry bar, we haven't broken the high of the entry bar, we're just going to hop out, like on a long. Or if we hadn't broken the low entry bar, we're going to hop out on a short. And I don't want to spend all the time going through all the rules today because we only have 10 minutes left. But we have 3 rules built in to tighten those stops really quick. That's if, you know, you get in and the thing just flies against you. We need to have a worst case scenario. Most of the time, I don't ever plan on taking that worst case scenario. Okay, you always want to have that defined up front. And like I said, we're going to give you access to it so you can actually pull all the stats you want and see the rules and see it play out in action. I'm going to let you actually be able to pull all of that. So instead of just trusting me and numbers I throw on a screen, I'm going to let you see it for yourself. okay? So, all right, so moving on forward. What are the trade plan notes? We already talked about that. Commentary on individual trades. They're numbered. Doesn't take any time to learn, right? You just click it, look at it, read it. You put it all together. Obviously this is NFP day, so we did warn we have a trading room, by the way, that comes with this. Okay, we call it the Elite Trade Room. There's multiple systems and strategies going on inside of it, and on that, basically we told people, hey, watch out, NFP's coming out, watch out, FOMC's coming out. Sometimes we would do pop-up notes. We include it in the commentary every day. We put the news plan up. So you have to pardon me on that extreme example right there. But nevertheless, I mean, technically it did go from entry to target, okay? And then popped up. It actually had a short, went down. It actually did hit the target on that one. Came back down. We didn't have what we define as a re-entry, so we would not have been able to take that. But I don't want to overwhelm you. I just want you to get the idea that you can look at the entries, the stops, everything. And we have step-by-step training videos that walk you through it. You'll know it. You can print out the rules. They're very black and white. So we looked at some days on several trades. Some days we'll only have one trade. Some days have none trades. Obviously, the more instruments you have, the better. We have inside of our forum, I'll show you where that's at. They have the basic rules. You can download them as a PDF file. We have complete step-by-step training, a Q&A discussion section. We also have the Elite Room that goes with it. Following these rules will keep you out of trades you should not have taken because we have what's called a reset rule. It will set you up for better potential trades. The biggest thing is it will tighten your stops and lower your risk. These trade rules fall just on a few trades over a few $1,000s, saved us, quite a bit of money and helped us make a few grand in the last few days. Any single market, so what does it cost? Any single market is $100 per month, okay? So all markets are $800 per month. So it obviously more than pays for itself as you go. We are doing a promotion right now that if you choose any single market, you can get the S&P for free with it, okay? So that way you're getting 2 markets for the price of 1. And we're also doing a thing right now because we're just launching this out into MetaStock. We're going to get it going. That basically if you wanted like one market and you're like, well, I want that other market also. So basically if you were to purchase 2 markets for $200, we're going to let you have all 8 markets for $200. And that is the main promotion. The other thing we're doing is we're doing this is just for new Apex users, MetaStock users only, okay? And you have to use a special link for this to work, so make sure you use the one I'm about to give you. And you cannot have had a previous trial, etc. If you have, you need to contact our help desk, but this is only for MetaStock users. So we're going to give you 30 days free access to the S&P, the EU, and gold. We're going to let you look at those, watch them live going forward without any single credit card and be able to check it out, okay? You can trade on any platform you want, okay? You can trade on any platform you want, but you're going to need to have MetaStock to chart it, okay? The first 7 days, we're actually going to give you all 8 plans for free, okay? So there is a promotion. The offer is going to expire here on the 15th to sign up for this promotion. So you're going to want to take advantage of it. And we're going to have a special webinar. Like I said, we are tidying up a couple things on it right now so we can release it out to you. And so we're either going to do one on Tuesday night or Thursday night. We might even do one on both. But if we do it just on Tuesday, we'll at a minimum make the webinar recording available. But to get access to it, you need to sign up. So now if you opted in on our offer, then you will get access. If you have not yet opted in, then, or either way, just to make sure, so you can actually start playing with some of the stuff now, hop on over and go to apexinvesting.com, okay? And go to apexinvesting.com/MetaStock and hit enter. When you do that, it's automatically going to take you to the sign-up page, okay? And again, we're going to email you by Monday. Like by Monday market close, we're going to tell you whether to do a webinar on Tuesday or Thursday. We're going to release the software. We're going to teach you exactly how to use it. We're going to do a long open Q&A for any questions you got. Again, no credit cards required for any of this. For the trial, for the free full week of all 8 instruments, for the 30 days on gold and S&P on euro dollar. to sign up. All this is free. And you can even, if you want to get started right now, you want to start at least learning the rules and how they work, once you log in, you'll see under product info, okay? So again, this right here is a sign up, but we want, obviously you may want to use the trial. So if you go under here, a little bit further down, you're going to want to go down to number 4, okay? That's your main spot. Product info, then number 4. You'll actually see videos that tell you about the rules, but there's a PDF file you can download. They're printed on the page as well to the very specific rules. And we'll put up, additional videos, of course, just for MetaStock. Like I said, we're just launching this out. There's also a forum that you can use as well on here that'll go through a lot of details for you. Okay, when you click on these, you'll actually get to a forum. That's what the video will be inside of it. And you can open that up. You can look at that. You can ask questions on that thread and everything else. Okay? But we'll do that. We'll send that offer out to you, or you already have that offer. So go directly to apexinvesting.com/MetaStock, and you'll be able to get access to the offer immediately. Okay? And then we'll send you an email with how to download everything by Monday and when the webinar is going to be, whether it be Tuesday night or Thursday night or both. And we'll give you free access to everything and no credit card required, so you can check it all out and see how well it really does. So again, that's apexinvesting.com/MetaStock, and go ahead and dive into the training videos right now on that product info day trading plan number 4. Okay. Also, you'll see under the product info day trading plans, you'll see you can access the elite trade room. So you can actually log into our trade room immediately. And start checking that out. It'll start hopping. I mean, there are traders in there at night. Start as early as 3 a.m. They'll start trading, and it gets really hopping, of course, most of the time during the day. But be on the lookout for the email invitation. So again, the URL for the MetaStock free trial is apexinvesting.com/MetaStock. Okay. You will need live data. You're going to need live data to use this. Yes, because it's for intraday trading. So end-of-day data would not do it for you. All right, I think I've answered all the questions, or John or Jeff or Kelly have answered all the remaining questions that are out there at the moment. If I didn't, feel free to hop on our website, sign up for that offer there. We also have a chat section. We're going to hop on there. We'll answer some questions for you. The plans are released. That's a great question, Willie. The plans are released before 3 a.m. each day. So that way those that are trading the euro, or the pound, in Britain, in the European Union, et cetera, are able to get going in time for the euro sessions. So yes, they actually do come out by 3 a.m. That is our cutoff time. We basically say by 8 a.m., but really our cutoff time is 3 a.m., and we hit that every day. So usually we get done by about 12 or 1. But they'll automatically populate as of 3 a.m. Okay? And they may populate sooner, but at least by 3 a.m. Let's see here. I think we got every question. Okay? All right, well, okay. It is not available for MetaTrader 4, but you can trade on MetaTrader 4. So if you want to see what all is available, and obviously this is a MetaStock webinar, guys, so I'm only going to talk about MetaStock. But feel free to check out our website, and you'll find all the information there. Will help you out. But anyways, check out apexinvesting.com/MetaStock, and to get access to that free offer out of the gate. Okay. All right, y'all have a great day. I'm going to go ahead and wrap up the webinar now. Hand this off to Rob. I know he's coming right up, and stay tuned. I'm sure you have another great webinar coming up right here, right now.